Well, good morning, everybody. Welcome to another webinar. Good morning, Marcus, Sarah, Stuart. Can you first of all hear me nice and clear? And you should be looking at the Forex Factory calendar on your screens as well. Just give me a yes if you can hear and see the screen. Okay, hear me and see the screen, should I say? Yep. Good. Hope everybody's doing okay today. We are now Wednesday, the middle of the trading week, and we are down for the week. Just had the euro pound lose. That puts me down dead on 100 pips. Not the start to the week I was hoping for. And the euro pound, the pound dollar and the pound yen are really messing with the mind. Those things are up and down, but we'll go over those briefly later on. First of all, this is YouTube Live. There is around a 10 to 15 second delay, and that means that if you do have a question, sometimes there is a delay in me responding to your answer. But if you do have any trade setups or any questions throughout the course of the webinar, please let me know. I will stop and answer them, and the purpose of the room is to review the opportunities that meet the rules outlined in the website freeforexeducation.co.uk, and we've had a few of them this week, and unfortunately they've lost. So we're really reliant on these two bigger trades at the moment. We're hoping pound dollar comes off, and we're hoping the pound yen comes off as well. Good morning, Harry. Just on the intro there, you've not really missed anything. So I do have a few trades to run through. I've got 1, 2, 3, 4, 5, 6, 7 to run through. Some of them we've been over them in the last couple of webinars. Particularly the pound New Zealand and pound Aussie are a couple of key ones that I'm paying attention to. So if there are no questions, we'll just take a quick look at the Forex Factory calendar. And today, the 24th, there's no news events out today. None that I would be paying attention to anyway. We do have in the wee hours of Thursday morning some Aussie dollar news, so if you are in any lower time frame trades, watch out for that. The markets will be thin during that session, and you could see some obscure spikes, and of course the fees will, as always, increase at that time. So I will bring over, first of all, let's take a look at the pound New Zealand, and if you do have any trade setups, guys, just let me know. The pound New Zealand is one that we've been looking at for a while, and this is now a potential head and shoulders. So let's run through the pound New Zealand, and I think we'll do the pound Aussie after this because it's similar. So pound New Zealand, we had, first of all, on the dailies, X to A to B, B to C, and a CD completion was down here. Just going to throw a fib on so you can see the completion of this cipher pattern. It completes as a minimum at the 786, and you can see we've hit the 786 and gone past it. We've also put in a higher high, higher close candle. We had the RSI confirmation that went overbought, and I'm going to drop down to the 240 because that's where we can see structure better, but I'm going to put on two structure levels, one at the closes of the candles and one at the lows of the wicks, and that will give us our price reversal zone where we can look for the two rotation patterns that we trade. They're going to be double bottoms and head and shoulders. We go down to the 240, and you can see that we've got this move for the left shoulder, the head. We've now violated the outside return. We can look for a pullback anywhere within this outside return just here, and look for long opportunities. This will be a very, very large trade. If you remember, we did talk about this in the last webinar, but what I'm just going to do now is show you again the structure levels that this has come into. So there's a double bottom just there, got a couple of little reactions just here. From memory, we did have quite a lot of structure here. You can see here that we've held this level 1, 2, 3, 4, 5 times. Let's look left. Small reaction there. So quite a few reactions at that structure zone. Was this the one where we also had the AB equals CD pattern? I think it was, wasn't it, guys? AB equals CD pattern coming right into our price reversal zone. Just clear this up a little bit. We also had the psychological number 18400 where we held structure at this level. And did we have another AB equals CD pattern? Was it this? I don't think it is. That may be on the pound Aussie. So we were initially looking at trend continuation, weren't we? When we was looking at this, we were saying, well, look at this. We've got a pullback. We've got to move lower. We can look for a pullback and we can look for a shorting opportunity. This is what we were initially looking at. Morning, Yuri. And we said that once we fully analysed the setup, that because we'd come into a major level of structure, because we had the cipher pattern, because we had the AB equals CD pattern, because we had the psychological number, the RSI confirmation, that maybe the trend continuation trade, even though it was valid, maybe was not the highest probability trade. And this was one of those situations where we said we should wait, because this could, along with being trend continuation, be a reversal for the head and shoulders. And yeah, that's what we did. We waited for the violation to the upside, and we can now wait for the pullback and a chance to get long. Did anybody take, though, the trend continuation opportunity? Because you had just here a lower low, lower close candle, which would have been an entry into the trend continuation. And when we spoke about this, we said that we could have seen a move all the way down to this level. Did anybody take that trade at all? If anybody's got a max risk of 100 pips, then they probably would not have been able to take this. Yeah, it would have been around 110 pips of risk. No. Simon, morning. Sarah, no. So I think this just goes to show, and I'm glad that that we've actually broken to the upside here, because we said, didn't we, that if you only have one strategy, and that strategy is trend continuation, then this was a valid setup for you for trend continuation. But because we've broadened our horizons and we have the ability to know what an advanced pattern is, or what a cipher pattern is, to know what an AB equals CD pattern is, to know how to read the RSI, to understand that we were at a psychological number and a major structure level that had been tested half a dozen times, that maybe the trend continuation was a lower probability. So if you only have one strategy, you would have taken a loss on this trade, but because we have a broad variety of strategies, we can understand that this was a lower probability trade. So whenever I can save myself a losing trade, I class that as a win. It may not be pips banked, but I class it as a win, because there are two ways to make money in the Forex market. Number one is being in winners. Number two is staying out of losers. Very, very simple. You know, if you take 5 trades, 3 of them lost and 2 of them won, well, you would have made more money by staying out of one of those additional losing trades. And this was the type of situation that we want to stay out of. So we can class it as a win. Obviously it's not pips, but we class it as a win. So I'm simply going to be waiting here for a pullback. In fact, have we actually had a confirmed? Yes, we do. This candle, or what am I talking about? This candle right here. This candle clearly violated this level. So yep, this is now a potential head and shoulders, and this is an initial structure high. So we violate the outside return, we call it an initial structure high. And then we look for a pullback into our price reversal zone, and there's going to be 3 areas, isn't there, guys? We're going to look at 1, which is the first chance entry, 2, which is the candle closes, and 3 is the last chance entry. And for me, the last chance entry is my favorite, because we do see very often rotation patterns down here, and that'll mean we'll have a small amount of risk, something like this. And of course the reward, well, it's going to be fibs based because it's going to be based on the cipher pattern and the AB equals CD pattern. And I think on this one, was the 300 pips, guys, up for grabs on this one? 300, 500. So if we got it pull back to here and we got an entry, 500. So very, very large trade, but I love it when we have confluence from multiple strategies, from ciphers to the AB equals CD to the head and shoulders, and hopefully when we drop down to the 60, we're going to look for that rotation pattern down here. Even more confluence would be nice, something like a lower time frame pattern down here. Maybe a double bottom, another head and shoulders, maybe an AB equals CD pattern coming into this zone as well with RSI confirmation. The world of opportunities awaits us. Exactly, Sarah, 500. Yeah, it kind of puts things into perspective about our 100 pips that we're down at the moment. 100 pips, even though is quite a lot, if you're quite an active trader, it really isn't a lot. It's actually just one good win or a couple of decent, half decent wins. So it isn't a lot. And 100 pips down, yeah, it's not nice to be down, but it isn't a great deal. But yes, big potential here. And if we do something like this, look at what we've done on the left shoulder. Multiple tests. Broke to the upside. We can look for the same thing, a pullback for a 26.18. You could even be aggressive if it's a triple test and you have the RSI confirmation. So yeah, if we see something like this down here, this will be something that I would be very interested in getting involved with. Right now though, we wait, don't we? We wait for the pound New Zealand. So big trade, expect to be in it a long time. Well, actually, when I say a long time, yeah, maybe a week for this trade, depending how price moves. But what I like to see is this quite directional move, and then we're putting in the and we're seeing still quite a directional move out of this leg just here as well. So directional movement means we don't see many retracements. So yes, looking forward to that trade. So we will move it to the side for the time being. And is there any questions on the pound New Zealand? Simon, so are you not trading the cipher but just using it for signal confluence? Yes, Simon. We no longer trade advanced patterns aggressively within the webinars or within the website. The reason for that was I actually stopped trading them a long time ago. They're actually the lowest probability strategy that we have, and more than that, they actually more often than not have an inverse reward to risk because you have to move your fibs with price, and that gets very time consuming, and you always end up usually with an inverse reward to risk. Now I did bring them back when we launched the website, and I didn't want to, but I had to because it's part of the educational material. But what we found that was within the first couple of weeks, we'd taken 120 pips worth of losses just on the advanced patterns. And the way it panned out anyway is after 2 weeks we stopped trading them, and we ended up finishing that month 600 pips up, but it would have been 720 if we hadn't have been trading them. But those patterns are profitable. It's just that for me, we tend to see big swings of wins and then big swings of losses, and the big swings of losses really put you into your drawdown, and that does not help your psychology. And we don't just want to be in profitable strategies, we want to be in very profitable strategies, and we want to be in strategies that don't put us in a big drawdown, so it helps with our psychology. Because for me, the number one reason why people fail is because of psychology, and if we can help our mentality out, well then that's going to do wonders for our bank balance at the end of the day. So yeah, to answer your question, we just use them as confluence. It adds like we see on the pound New Zealand, it adds to the ABCD pattern structure and the head and shoulders. So let's go and take a look then at the pound Aussie. Let me bring that over. Yeah, no problem, Stu. No problem, Simon. Okay. Ugh. Pound yen and pound dollar. Ugh. Right, where's my pound Aussie gone? You know, I end up changing the names of my currency pairs, and I end up losing one of them. Okay, so I've got €1 Aussie, €1 yen. Yeah, I've got €2 Aussies. Right, so this must be the pound Aussie. Okay, so let's bring over the pound Aussie. So very similar to the pound New Zealand. We've seen quite a big rally here on the pound pairs. It's not looking good for our pound yen or our pound dollar, I have to say. So higher time frame analysis here on the pound Aussie. We were looking at this AB equals CD pattern. Just here. I'm going to move it off to the side so we can see it. And we said that it's come into this structure level here, which is the wicks, and we're then allowed to drop one time frame lower and look for a valid entry. And we have a valid and now a confirmed double bottom. I'm going to put a structure level on just there. I'm just going to remove this out of the way. And we had several opportunities at this, didn't we, guys, where we looked at this and we said, well, this is valid right now, but the way that it looks is that we have multiple candles here for the first test, but the second test we didn't have roughly the same number of candles, but we did have the RSI confirmation, and it was also something like 150 pips worth of risk. So what we did is we waited and we got the market that came back down for the test. So similar number of candles now on either side, and this was a valid opportunity, but it was still over the 100 pips max risk. And there are three ways that we can get involved with the trade. Number one, we can get involved right at the very bottom. Number two, and I'm just going to throw a fib on for targets, guys. Number two is the journey. So price has come up to this level, it started to enter in trend, we get an opportunity halfway up and rally and follow it through to targets. And number three is, well, if we were looking to short the market. So there are two ways that we can get involved with this trade. And so what we did was we waited for the breakout, and we are rallying here, but what can we now wait for to get involved with this trade? It's going to give us a higher probability entry. I can throw a fib on from our swing low to swing high, and we can use the 2618 strategy. So we can look at price coming into that 61.8 just here, and I think it's still going to be, yep, still 160 pips worth of risk. So we're going to have to drop down the time frames here, guys, and look for entries, aren't we, should I say. So I actually like the look of this area right here for the entry. It actually comes into the 61.8 and this little double top and this retest just down here, so it would be nice if we could get the market to now reverse. Do we have an AB equals CD pattern that's set up there? We've just come into that zone right now. Is there any structure looking left? There is. 1, 2, 3. Very minor blip there, but you can see it's had that level tested. Look at this. 4, 5, 6, guys. 7, a lovely test there. Okay, so not only are we looking at the market coming lower, but we've got an AB equals CD pattern. I'm just going to check it is an AB equals CD pattern. Do we hit the 382? Yes. Do we have a 1618 extension up in that area? Yes, we do. Right up at the very highs there. I would actually wait for the 1618 to be tested before looking for an entry, but we are very close to it. Do we have the RSI confirmation? We are almost there. We are almost overbought at that level. Is there any other fib confluence at that zone? If we put a fib on from our swing high to swing low, do we have a 61.8 dead on that area? Ooh, we fell a bit short. What about a 382 from this level? Nope, maybe a 382 from this level. Well, we've rallied past it. So AB equals CD pattern, 1618 extension, coming into a very nice resistance area. Does everybody agree? We've got 4 tests, 5 tests. Just look at the tap there and the rally off it. 6, 7, and these are not small tests. These are quite deep retracements from these zones, so nice areas to look for moves. And what can we do then, guys, with this strategy, with this simple AB equals CD pattern? What other strategies do we need to add to it to give us additional confluence that we could be seeing a retracement lower? And we do what we are allowed to drop 1 time frame lower for it. And here the RSI did tap the overbought area. Double top. Yeah, exactly. Double top. Head and shoulders as well, but double top here. A nice retest would be lovely. And we can then look for targets. Excuse me. So if I throw a fib on, the AB equals CD pattern is a fibs based pattern. So this would be one of those situations where I would play for 2 targets. Excuse me, the 38.2 and the 61.8. Now, can anybody tell me why I would play for 2 targets in this instance rather than just the 38.2? And I'll just give it a minute. So this will be something like the risk on this trade. This will be the reward. And target 2s will be down here at the 61.8. I'll give you a clue. What are we looking on for the 240? We're waiting for a retracement and an entry into what strategy? There is structure at target 2, but target 2s usually for the AB equals CD pattern are usually only play for target 1s, but there's a reason why I'm going to be playing for target 2s down here. Harry and Sarah has it. Yes, let's go back to the 240. We've got the double bottom, the 2618. If we see the retracement comes into the 61.8, which is exactly where the 61.8 is for the AB equals CD patterns for target 2. So in this instance, if we start to see a retracement, then we have a higher probability, don't we, of coming down to the 61.8. So this would be one of those situations where I would play for 2 targets. So a double top up here would be very nice. We would be looking at something like 28 pips of risk. Target 1s would be around 65. Target 2s around 114. And then when we come into this level, this highlighted level, this is where we're going to be looking for an entry to get long. So plenty of opportunity here on the pound Aussie if we get the double top, if we get the retracement. Any questions on the pound Aussie? Looking like quite a nice setup. Let's just hope the pound runs out of steam, because I really would like our pound dollar to win instead of rallying the wrong way. What are you doing? Oh dear. Pound yen's probably the same, isn't it? Yeah. Yeah. So let me just get rid of the pound Aussie. And let's look at what else we had on the radar. So we've done the pound Aussie, we've done the pound New Zealand, I'll bring over the New Zealand yen. We will take a look at that one. If you do have any currency pairs, guys, you want me to take a look at, just chuck them in the chat and we will do. New Zealand yen, cipher pattern that lost. We did get involved with a lower time frame double bottom, which was confirmed. This was it right here, was a valid double bottom, and it was confirmed, and it still lost. And so glad we don't trade advanced patterns anymore. But what we do have on the New Zealand yen is we had a move higher first of all to this point. I'm going to leave a structure level in there, and I did say on our last webinar, be very cautious here, because we put in this pin bar and we could be putting in a lower close, because we are also at the psychological number 7300. Didn't quite go overboard on the RSI, and as you can see now, we did put in that lower close, and we could see a retracement here. I don't know where to, it's not something I can trade, but I do like to form a bias on every time frame, and on this time frame it's looking like we could see a small reaction here to the downside. If we go and take a look at the 240, 240, this, if we just draw out the trend, I won't draw out all of it. We had a move higher, a pullback, a move higher, then we've now actually closed below the outside return here. So potential trend rotation here, potential move to the downside. Let's go to the 60. Do you know, I've wrote 3-bar reversal here, but do you know, I don't think it was on this currency pair. Okay, it might be on the lower time frame. Here on the 60, there's not a great deal, to be honest. It looks as though we're working our way lower. This would be the next structure level down here that I would pay attention to. Let's go and take a look at the 15. And I've got nothing here on the 15. It must have been a different currency pair. It might have been the New Zealand dollar, actually. So if there's no questions on the New Zealand yen, I'll have a look at the New Zealand dollar. There's the 60. Let's check out the 240. Yeah, this was the one. And it came into the lows of this structure level just here. And when I was looking at it, this red candle was up here. And we did have the RSI confirmation, which went oversold, and there could have been a 3-bar reversal here, but there isn't now. We've obviously just had the 4-hourly candle close because it's 10 o'clock, and we finished bearish, so no 3-bar reversal, no higher high, higher close. So since we're on this currency pair, guys, we may as well take a look at it. So we are in trend here on the dailies. We had a move higher, a pullback, and then a move higher. So we can be looking for a long opportunity anywhere within this very large outside return. We can drop one time frame lower and look for any confluence. And you can see that this internal level of structure right here is where we're currently at, and we have held it, but it's not provided us that 3-bar reversal. It's not provided us that confirmation. Let's go and take a look at the 60. Here on the 60, you can see we are still holding structure, but it's still not providing any form of entry for me. You can look at a potential double bottom here, a potential retest. You do have the RSI confirmation, which is oversold with divergence. It's not going to be one for me, to be honest with you. You can see that we are down here within the wicks, and we've just held structure, so we could see a pop to the upside here. Let's just take a look at the 15, see if it makes this look any nicer. And here on the 15, it looks a little bit ugly, doesn't it, guys? Looks a little bit ugly. If we bring that structure level down to the low of the wick, we know that if we implement our structure hold and violation rules, that we needed a break below, close below this wick to have a confirmed violation, and we don't have that. So price came down, it closed below our structure level, but we technically held structure because of this wick, and so we've got a double test here. You've got a break to the upside, a pullback I suppose for a 2618. We came up to retest, and again we're back down in this level. So if I was expecting price to go higher, I would have expected it to go higher at this point and not retrace all the way back down to this level. So even though it's a potential double bottom here, potential rotation, it's just lower quality for me. I'm simply just going to stay out of this and see what happens. Any questions on the New Zealand yen? New Zealand dollar, guys, sorry, New Zealand dollar. Other than that, going back to the dailies, you know, we could see quite a steep retracement here down to this level, and it's unlikely we're going to get an entry for a trend continuation just due to the size of it. The risk would be 100 pips, so it's unlikely that we're going to see anything there unless we get a rotation pattern somewhere. Any questions then on the New Zealand dollar? If not, I'll scrub it out, and the New Zealand yen, we'll scrub that out. And we will go and take a look at the euro dollar. The euro dollar. Okay, that's another one where I've got the currency named incorrectly. So euro yen. Okay, we'll make this one the euro dollar. Let's go and take a look at the dailies, and this is a bit of a mess for me. As we can see, what price has done is we had a move higher, we had a pullback, we had a move higher, we had a pullback. We looked at this. We did say at one point this could be a low and tight flag, but we couldn't take it. It was at the 112 psychological number, and it was near this structure level as well, but the low and tight flag has come off and has just now hit that 127 target. So what I'm looking at is, if I put a structure level on just here, we have 1, 2, 3 tests within this zone, and we could see a reaction. So if we drop down to the 240, we have first of all got the RSI that has gone oversold at 10, so massively oversold there at 10. I'm just going to readjust this to the closes of the candles like that, and we have only just come in to this price reversal zone. What we do have down here is the 111 psychological number. I would like to see price push down to that level and then retrace and give us a nice rejection candle. But I would be looking for a small double bottom here, guys. If we get a double bottom here, where would you guys look for targets? There are a couple of things that we can use for targets. We can use fibs and structure. Tell me what structure level you would look at and what fibs you would also look at on this potential trade. Well, here's a fib first of all. And our most recent structure level, or our lowest structure level, is right here. Second is this one. Yeah, pretty much that one. So, what target would you guys go for? Would you play for a fib target, which pretty much comes in the middle of nowhere? Would you play for conservative targets for this first test? Second or third, which one would you guys play for if we were to get a double bottom down here? Conservative, number 2 or number 3, or even number 4, the 382. Conservative. Conservative for me just here. Yeah, lowest structure level, exactly. Yeah, we want to be conservative, and the reason for that is because we're just in consolidation, aren't we? We have absolutely no indication here what the market is going to do. So when we don't know, we want to be very conservative with our entry, with our stop, and with our targets. And a double bottom right here is conservative because it's a small amount of risk, and our target is conservative. But if we do get something like a double bottom down here, that's your risk, that's your reward. You probably have something like a 2 to 1. I'm sure this is going to be big enough to take if we do get a rotation pattern down here. Yeah, 28 pips of risk. You'd be looking at about 63 of reward if we do get double bottom down there. So that's it for the euro dollar. Did anybody have anything on the euro dollar? Did anybody take this low and tight flag? It was something we spoke about, but it didn't meet our rules. Came off nicely though. At the moment, we're seeing winners come off without us, and we're seeing losers losing with us. But that's the euro dollar. We'll take a look at the 15. I don't think there was anything on it. Not with us just coming into that structure level. Not a great deal here for me. We had a move lower. We saw a pullback. So this was a falling channel. 1, 2, 3, 4. There was your 5th test. Targets a retest of this level. And you can see it hit and we dropped to the downside. So nothing here for me. Marcus is waiting for the test of that support level. Yeah, not too much on the euro dollar. So we will move that one out of the way. And it is not looking good for our trade on the pound dollar. Let's just take a look at the 15. It looks ugly. It looks ugly. Let's take a look at the next currency pair. Okay, let's take a look at the euro yen. The euro yen, I almost sold it. I was literally just pressing the sell button when the market decided to spike down. We'll do the higher time frame analysis on this. So we still have our big daily flag pattern up here that meets the rules. We'll just draw the channel out. 1, 2, 3, there's the 4th touch, looking for a 127 extension. And as always with the breakout patterns, if we don't get our optimum entry, we can always look at getting involved with the move lower. And the reason why we can is because these are called breakout patterns, and as you can see, we do exactly that. We usually break out with force, and that's exactly what we've done, guys. Now, it's not just one candle, because this is the dailies. We don't just get one candle all the way down to our destination, but we've been monitoring this now for the past week. We had a breakout here. We wanted to be a little bit cautious because it was at this structure level, then it was at this one, then it was at this one, and eventually we got the breakout. And so we just never got a chance to get involved with the trade. And here on the 240 we had a move lower, the pullback, the move lower, the pullback. Then we had this horrible spike, the pullback. Then we had this, the pullback, and we had this entire consolidation area. We couldn't get involved now because we'd retested this level multiple times and we needed a violation of it. And right here we got it, and we looked for a pullback yesterday, but it didn't provide an opportunity. Okay, it almost did, and let's go and take a look at that opportunity. So this was our structure level, our outside return. This was our lowest point. And because this is a breakout pattern and we move directionally, then we very likely was only going to come into the wicks before we got the breakout. So the wicks are from the closes of the candles to the low of the wicks. And this was the most likeliest area we were going to retrace to get a shorting opportunity. And we just fell short. So it would have been nice for this to come up to this level and then provide us an entry, but it didn't. Instead, what we've now done is we have done 1, 2, 3 point move. I am actually short a lower time frame 5 range flag pattern on this. We'll see if we can get a little bit of a breakout, but if that fails, we're going to be looking for a pullback anywhere to this outside return. And because this is on the 60-minute, okay, let me just clarify something. The 5 range flag pattern that we're in is a very lower time frame pattern, and I'm taking targets at the 127. However, this 60-minute trend continuation trade, I will use this to play for the bigger 127 targets, which are all the way down at this level, because it has a higher probability, it's on the higher time frame. So we will simply implement our trend continuation rules. We will look for the first chance, second chance, and last chance entry, and a chance to get short on that trade. And it would be a very nice winner if we were able to get involved with this trade. 140 pips up for grabs on that opportunity. Let's just take a look at the 15. And we'll just go to the 5 range. Take a look at that. Okay, Yuri, weakness in the market. Yep, exactly, Yuri. Harry, you know, seeing your analysis, the market is calm, my mind, and makes it easier to understand. That's great, Harry. It really is great. And it is important to stay calm within the market. You know, it's looking like, you know, this week is not off to the best start. And we got 110 pips up on the pound dollar. And I may only now be 40 pips up, and the pound yen is looking like it's going to lose as well. But the important thing is to remain calm and to understand that, you know, this may be a losing week. It may not be. The pound dollar may turn around and hit, and we'll be back at break even, and we then may get involved in one of the, maybe the pound New Zealand, maybe the pound Aussie. There's 900 pips up for grabs between those two trades. There's this big euro yen trade which may retrace and give us an entry, and we may hit for 140 pips. And you know, we have a higher probability of winning than losing, and when we win, we tend to win significantly more than we lose. So seeing a losing streak is just that. It's a losing streak, and we have to understand that if we were to allow that to affect our psychology, ultimately we're going to mess up those potential trades in the future. We're either not going to enter them, we're going to enter them aggressively without confirmation, or we're going to sabotage the trades. We're going to do something like that. And yeah, Harry, it's very important to stay calm, do the analysis, keep doing what we're doing. A losing week is, well, it's a losing week. We're still up since we started, quite a lot of pips. So it is not the end of the world if we finish down this week. Of course, I do like to finish up every week, and I do like to start the week in profit. But it doesn't always happen. So it is part of trading. This was the little flag pattern that we had here. So I'm just going to delete this off, because what we actually had was this little area just here. We'd come down, put in this little blip, and then we put in this flag pattern here. So we had 1, 2, I think it was here. It was something like this anyway. We had the 4 touches, and we was looking for a 127 extension. You know, I'm not too sure where I drew the pole out from. We may have drawn the pole out from this level. Anyway, we're in that potential flag pattern. We'll see if we can get a continuation, but if not, as I say, bigger picture here, we're looking at this outside return just here, looking for the pullback and the chance to get short. Harry, I will join your team for sure. That's great, Harry. Ask other members that are, you know, I think you've joined now, haven't you? You've joined the platform, but go ahead, you can direct message people. You don't have to put it in the chat forum. Just ask people that are already registered. Are they enjoying the platform? How is the educational material? How are the webinars? Are we making money? Are we making profit? You know, all the normal questions. I'm not here to make money from the fee. The fee is only £70. It pretty much just covers the cost of the website and text messages that go out and a few other things as well. The website's been created so that we can get together as a community. We can help each other. We praise each other for winning trades, and we're there to support each other during those losing streaks as we're doing. And being in those trades together as a community really helps the psychology, because it's the number one reason people fail is because of the psychology. It's not because they continually take losing trades, or they have a bad strategy or a bad reward to risk. It's them that let it down, and I did it for a long time, and when that stopped, my trading improved. But that's why the site's been created. It's to give us support, to support each other, to help with the psychology, which inevitably will make us profitable. So that's the euro yen. Let's see if we get a move to the downside. If not, as I say, we will be waiting for the pullback for the 60-minute. Let's go and take a look at the Aussie dollar. The Aussie dollar, we were looking at a complex pullback the other day, weren't we? Now, some of you may or may not know what a complex pullback is. I haven't actually added it to the educational material. I do need to do that. That's one thing that is missing out of there. But we'll run through the Aussie dollar. And we had a move higher. And with this move here, we physically closed above the outside return. We physically closed above this structure level. We saw a pullback, and then we saw a move higher. So this is the outside return. And what I'm noticing is that the retracement here is already longer than the extension. So even though this is trend, I would have preferred if we could get involved with a trend trade right up here, but instead we're seeing quite a deep retracement here. So as we drop down to the 240, I'm going to delete this off. We had this, so we had a move higher, a pullback, then a move higher, And then we had something called a complex pullback. Does anybody know what a complex pullback is? And it came close to the lows of this structure level. Anybody know what a complex pullback is? Looks like an AB equals CD pattern, but it's basically just a trend within a trend. So if you know how to read structure, then this is a bullish trend. Okay, we're making highs like this, and then what we see is we actually see a trend the other way that comes back into our structure zone, and the market is trying to trick you and say, oh, we've reversed trend. But in actual fact, because we've not violated the outside return, we call it a complex pullback. Call it whatever you want, it doesn't matter. It's basically a trend within a trend, and we can use that to our advantage because it's basically an AB equals CD pattern. And you can use it as confluence to get involved and to get long on the trade. And that's exactly what we were looking for here. And we'd come down into this area and it provided no entry, and in fact we just rallied straight through. So this is quite a good complex pullback to show because we waited for confirmation, and we do that with all our strategies. We wait for confirmation because it keeps us out of losing trades like this. And as you can see now, we're breaking to the downside. So let's take a look at the 60. Okay, so if you're a little bit more aggressive, here on the 60 we are in trend. We had a move lower, a pullback, 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 and now we have just made a move lower. So we are still in trend. And look at what we're doing. We're making long extensions, small pullbacks. Long extensions, small pullbacks. This is the type of trend continuation that we want to be involved with. Even though we don't really have too much higher time frame confirmation, you could look for a 60-minute trend continuation opportunity here. Okay, I was just looking to see if there was a cipher pattern. There isn't. Okay, what we want to do though is see, is there room for the market to come lower? And what we're going to do is we're going to put a structure level on at the very lows of where price has come to, and we're going to look left and see if we've come into any major structure level that would stop us taking any trend continuation trades. And we can see that we've got a little area just here. We've got a little area just here. But there isn't. Well, if we were to move this down a little, so if price came a little lower, then you can see it does actually come into more of a resistance area. Let's just keep looking left. So even though that's setting up for a trend continuation trade, just a little bit lower down, we do have structure, don't we? We've got a big wick there. So trend continuation, even though there is a little bit of room to the downside here, it's not going to be big enough to take. If you was to get involved now, you'd be looking at 11 pips of reward. If you go to the 15, you could actually look for a little pullback here on the 15. This would be the outside return just here. Look for a lower low, lower close. This would be something like your risk. And I would not be playing past that level, and it would provide something like a 1-to-1 reward to risk. How many pips are in this? Well, you're looking about 12 for 14, so not a great reward to risk, but it is a potential depending where you get your entry. But second chance entry here, simply look for a lower low, lower close candle. Any questions on the Aussie dollar? If not, that's going to take us to... I'll do two more pairs, guys. We've got the euro... Sorry, nope, we've already done that one. And done that one. That leaves me the Aussie dollar CAD, which doesn't really have a great deal on it. So if there's any currency pairs or any questions relating to trend or trade or breakout patterns, anything at all, now's the time to ask them. If not, nope. Okay, we'll just take a look at the Aussie dollar CAD. Really don't have a great deal on it, but we'll take a look at it. So this is the daily time frame here. Structure level on at our very lows just down here, and you can see that we did violate this level of structure right here. So this is an indication that the market could go lower. However, we did only just violate that level of structure, and what we've now done, if we just draw out the trend, we had a move lower, a pullback, a move lower, and with this pullback now we've actually violated. So this was the outside return here, these very highs, and we've actually closed above this level. So this actually looks like a very nice head and shoulders. But the problem for me is that we have already violated to the downside here. Otherwise this would be a very nice looking head and shoulders. And I think I've already looked left for structure. Yeah, we're actually at, I think, 10 or 11 year lows on the Aussie dollar CAD, so there wasn't any recent structure for me to look at. So even though this looks like a head and shoulders, it's not going to be one for me because we violated to the downside. I think though that we could see a reversal at this point, and the reason for that is, yeah, if I put a structure level on just here, then this is the point that we've turned, and if we go and look at the 240, we've double topped up here and we've broken to the downside. So we could actually see a move to the downside here. We've had a fairly directional run, and it looks as though we could start to see the market run out of steam because the candles have gone from big bearish candles and they've started to reduce down in size. I would predict price would come down to this structure level. So let's go and take a look at the 60. Here on the 60, we are double bottoming, or it could be a low and tight flag. So do we have an AB equals CD pattern? Nope. Do we have structure at where this double bottom is forming? And we'll put it on from the close of the candles to the wicks, and we will look left to see if this double bottom has come in at any form of structure. We have a minor test just here. This was valid, that was valid, this, yeah, because of the wick, that was, this was, that was, here as well, that was not. Okay, so it has come into a structure area. Now I would not be interested in buying this up for a double bottom because targets would be here, and we were very close to targets. There just wouldn't be enough room in this. What I was looking at was to see if this would be a valid low and tight flag. However, this has come into structure. So for me, this is not going to be a low and tight flag that I can take. Let's just take a look at it on the 15. Yeah, it's not valid on the 15. Yeah, so does look as though we might break to the downside here, but it's not going to be a valid low and tight flag for me. That was the last currency pair, guys. Any questions? And just as a reminder to everybody that's registered in the system, don't forget to place your votes for the most helpful trader. Now this month, in fact, just let me bring over the chat system. So what you do is you just click on the name, so just pick Andrew here, and all you do is vote as most helpful trader. You just click on the thumbs up there, and he will be given your vote. You'll only be given one vote per month, and on the first working day of the month we will pick the most helpful trader, and the first month they'll actually get a unique badge that will be awarded next to their name. Now, other than that, there'll be nothing awarded to that person for the first month, but the month after there will be a prize that will be given to that person. Okay, and I'll let you know more about that when we dish out the flag. I'm not eligible, so please don't vote for me, but the more helpful that you are within the chat, the more likely you are to be awarded the badge. And as I say, the month after there will be an award that will be given. I haven't quite decided what it's going to be, but I would say that it's going to be very worth being involved in the chat and trying to get that award. I may even increase it to 3 awards, so the gold, silver and bronze. Certainly as the platform grows as well and we get more subscribed members, what I have planned will kick in more and more. So I can't say too much more than that, but other than that, yeah, go in and vote for those most helpful people. I'll tell you, there is somebody in the lead and there is somebody second and third. Other than that, you'll just have to wait. So no other questions, guys? As I say, not looking too good on the pound dollar, not looking too good on the pound yen, and the pound is really seeing some strength here, and we may just see some big rallies here. We may see some big gains. Now Boris has been voted, elected Prime Minister. We could just see some stability, and we could see, some big moves here on the pound, but we'll wait and see. Other than that, guys, thank you very much for joining me again on this webinar, and I will see you in the chat.